Hello and welcome to another edition of our ETF Insight series, where we chat with innovative leaders from the ETF and digital assets ecosystem. Today, I'm delighted to be joined by Dan Izzo, who is CEO of GHCO. Why don't you tell us about GHCO and what you do there?
GHCO is a leading liquidity provider in ETPs and digital assets. We market make ETPs on all the major European exchanges, and some of the not so major European exchanges, and of course over the counter. We're the lead market maker on nearly 2,000 products. We pride ourselves on being able to find the right price for whatever it is, whenever you need it, to the extent that people want to trade anything from fixed income to digital assets, emerging frontier markets, multi-asset funds, you name it, we will find the right price.
So you mentioned over the counter, and I know in the past you've talked about you expressed your opinions about the fact that it's a very high percent of OTC trading that's done here in Europe. Now, do you think that there is a way to fix that? Is that here to stay? Love to hear your thoughts on that.
The thing that we have been frustrated by in particular is the fact that a lot of the over-the-counter trading that happens in the European landscape doesn't even happen at a representative price of where the product should be, right? So we provide pricing to the exchanges available for everyone all the time. Open to close, we are there, bid and offer. Our bid and offer are contractually committed to reasonable levels around the fair value of that product with the ETF issuers themselves. Whether people choose to trade on the exchange or not is a much more difficult problem to solve. What's really frustrating is when people trade off the exchange at prices that are lesser than the exchange price, right? Like if we're offering a better price on the exchange, then people habitually trade over the counter at a worse level. It just is baffling. It doesn't make any sense, right? Like it's a free market economy. Presumably the best bid and best offer should be delivered to the end client. We at GHCO are aggressively moving into the over-the-counter space, not because we want to, but because we have to. The reality is fully 90 to 95 and higher percent of volume in the ETPs trades over the counter. ETFs have had record years accumulating assets. Those inflows are all going over the counter. And really the right answer is for the over-the-counter liquidity providers to come to the exchange and everyone meet at the exchange, because the beauty of that is it's regulated and it's fair. And it's meant to be more representative of everyone involved in the market, as opposed to, these dealers have exclusivity on these clients and those clients are willing to accept a lesser price for obscurity. That's not efficiency, right? That's not market efficiency. Unfortunately, I don't see a solution that brings people back to the exchanges without another regulatory overhaul. A lot of what you see today is engineered byproduct around MiFID and other regulation. Where there was very well-intended regulation, I don't think it had the effect it was expected to, right? So now the regulation has effectively driven the flow off of the exchanges and into over-the-counter, and where you don't have 100% participation in fair competition, and you have inefficiency and all the things that are not constructive to the market.
Right, because it still happens in the US where I don't know off the top of my head what the OTC flows are.
If you look at any of the most liquid ETF products in the US, there's still plenty of risk prints. The big difference in the US structurally is you have much more stringent reporting requirements and you have a consolidated tape, which means that maybe you need a market maker for an outsized block risk trade, and you're going to do that trade over the counter. But that has to be reported to the consolidated tape so everybody knows about the price discovery. Any market participant in the ETF space will tell you that trying to get a good picture of actual traded volumes and levels on those volumes in Europe is nearly impossible. I've had the conversation to great lengths with all the issuers, Bloomberg, the exchanges. You talk to whoever you want to talk to. There's just no good source of consolidated reporting out there.
Hopefully, at least the numbers from that 95% that you were talking about kind of comes down at some point. But I do think it's tough, as you mentioned. What are you, obviously you're client focused and that's a priority for you. What types of things are you hearing from your clients these days?
Crypto-based ETP products are kind of at the forefront of everyone's mind. There's just a huge urgency around it, but you still have to put it in the context of flows and assets. I think there's a much larger conversation going on right now around ESG, which is not nearly as sexy, but it's still a very big deal in that the addressable AUM relevant to ESG is just infinitely larger than crypto is today. So I think the popular conversation is around crypto because everyone finds it fascinating.
I just went to a crypto conference last week. It is a very exciting space, but because it is new. But yeah, the ESG thing, especially here in Europe, and I think eventually in the US, there's absolutely no question. Like they're starting to launch a lot of products. And Blackwater, we cover the weekly newsletter, which probably half crypto, half ESG, because there's so many talking about flows and all these firms that are basically changing their indexes to go to ESG. So there's definitely a lot of demand there too. But Dan, thank you for all your interesting insights. And for those watching, thank you for watching. And if you'd like to learn more about GHCO, you can reach out to Dan directly. Thanks for watching.